Alibaba just reported their Q2 earnings, and as I'm sure you're well aware, the market reaction was insanely negative. The share price collapsed from the high 160s down to the low 130s. Was this negativity warranted? I'm not so convinced. Let's dig into it. You're watching More Money? Let's get it. When you're buying shares in Alibaba, you're largely buying three businesses: the Chinese commerce platform, cloud computing, and their international commerce business. There are others, but these are largely the big three. With cloud and international, the hope is really that these businesses continue to grow and become more meaningful to the company overall in the future. But for now, China commerce accounts for 79% of the revenues once you exclude the international retail and wholesale revenues. So that's a long way of saying that when looking at the quarterly results, we have to focus primarily on the Chinese commerce business, which will be the focus of this video. And in the next video, I'll cover the other major segments, cloud and international. And of course, if we're covering the China commerce segment here, it runs a smack into the elephant in the room: slowing revenue growth in their customer management subsegment of their overall China commerce retail segment. Now, just a reminder, guys, the customer management subsegment is around 58% of the overall China commerce retail segment. The other half is the China commerce retail other subsegment, which makes up the other 42%. And the customer management segment includes their two largest brands, Taobao and Tmall. So what exactly is causing the slowing revenue growth in this subsegment? Well, they mentioned that revenue in the quarter grew 3% year over year, primarily due to slowing market conditions and more players in the Chinese e-commerce market. This makes a lot of sense, as some drag impacts were expected from the anti-monopoly charge that Alibaba was levied at the end of their fiscal year 2021. I'm actually very surprised that other YouTubers haven't called this out. Alibaba, of course, has to shed some revenue to their competitors because they were holding some of their customers to only list on Alibaba. That's no longer the case, and so yeah, revenue is going to decline a little bit. So of course, vendors would be encouraged to diversify across all of the available platforms. It's just a tougher marketplace overall. Additionally, we have spoken on this channel about slowing near-term market conditions primarily as a result of the increased measures to contain the spread of COVID in the country, rolling power outages, and mounting concern over a potential housing market correction. So yes, a slowdown in the quarter was expected. However, I didn't expect the customer management segment to slow down to an only 3% quarter-over-quarter growth and a year-over-year growth of 9%. That being said, I wanted to show you guys something that will really help put this all into perspective. Back in the summer, when I made the model on Alibaba along with the 6-part series, which, side note, you can grab from the description below for free. Just do me a favor, in exchange for the work, please consider smashing that like button as a way to say thanks, dude. But anyways, back to that model. I made a point to note that the days of the 40% growth in the China commerce retail segment were largely done. As Buffett says, growth does act like an anchor to future growth, which is what was being forecasted here. And you can see from my 5-year expectation going into 2026 was that the growth in this segment would largely decline to somewhere in the 18 to 20% range overall. So basically what I'm saying here is that if you expected 40% revenue growth here to continue, you may have been too positive on the segment. And guys, that's not a dig at anyone. To be honest, there's nothing wrong with being positive in my opinion. Cathie Wood is an example of someone who has been very successful with being positive with respect to the future throughout her career. I've just seen so many companies burn investors so many times over the past couple of decades that I'm just naturally pessimistic now unless I have a very good reason to be positive. As an example, 12 years ago, I was actually laughed at when I said that BlackBerry would probably not be the leading phone of choice going forward in the business community, as I saw that some people were starting to use Apple iPhones as they were coming out. And now, just 12 years later, BlackBerry is almost non-existent in the marketplace, which was unfathomable at the time. So things can change, and so we really have to think about both the upside and the downside. So back to Baba, with the elephant in the room, I can largely say that we did expect a slowdown, but not into the single digits as we saw in the quarter. And the people selling off the shares of Baba have a very real contention, which is that they believe that the future growth will be slowed down into the single digits territory. And I see people fighting in the comments sections, but really, guys, are they wrong for having that opinion? No. That's the beauty of investing. We can disagree. Do I personally share their opinion? At this moment, no. This is only one quarter and we'll monitor how this plays out going forward, but I'm not really concerned. Volatility in the results of business operations can happen, which can create opportunity. As Charlie Munger says, business only goes up in a straight line in investment banker pitch books. Now, in order to round off that discussion on the China commerce segment, we have to also look at the China commerce retail others segment. You can see here that it's just labeled others for short, which makes up approximately 42% of the China's commerce segment overall. And just a reminder, this segment contains hidden gems like Sun Art and Fresh Hippo, both of which I'm super excited about. And it's absolutely nuts, but the segment grew at 95% year over year, which did a very good job of partially offsetting the slowdown in the customer management segment. Now, this was largely because they have fully consolidated SunArt. But what's not being spoken about, and something that I did mention in the 6-part series, is just how well they're doing in their direct-to-customer sales business, i.e. their grocery stores. Alibaba is really innovating the game, and in my opinion, that Fresh Hippo brand is about 10 years ahead of where we are here in North America. So there's lots to look forward to there as this business gets going. Now let's quickly talk about their guidance for the remainder of the year. When they reported their fourth quarter 2021 results, they had provided guidance that they expected to generate 930 billion RMB in revenue in fiscal year 2022, which reflects revenue growth of approximately 29.7% over fiscal year 2021. That's absolutely massive. With the results in the quarter, they have brought down their revenue growth guidance to 20 to 23%. This reflects the challenging macroeconomic conditions plus the increasing competitive landscape. So of course, it's less rosy than it was 2 quarters ago. But once again, I have to reiterate, even though they guided to 30%, when I'm thinking about the business on a 5-year lens, I brought that revenue growth estimate way down to around 20%, which in hindsight, it really does make me look like a genius right now, but really it's just me being a dummy that's overly conservative. If you can't be smart, be safe, which is also a motto I used in my college days for other reasons. Now here's what you've been waiting for. Overall, after going through the results in detail, my valuation hasn't come down much at all. I'm still valuing the company at that approximate $300 a share area, which at the current share price gives it more than 100% upside. Download the model from the description for free and let me know if you agree with the assumptions, or better yet, tell me in the comments what you would change and why. I respond to absolutely everyone. Just please don't forget to smash that like button. Now, if you're a little down with the recent price performance of Baba, it's completely understandable. Nobody likes to be in the red, but I would encourage you to look at the results. There's a ton of amazing things happening with the company. In the next video, I'm going to go over some really amazing developments that have happened both with their international business and cloud computing business. When that video is available, it'll pop up right here. Until then, check out my first look at the quarterly results, which you can grab right here. Thank you very much, guys, and I'll see you later.